So, listeners, today with us in our program, we have Sir Chenio Lotha. He is Securities Market Trainer in SEBI, which is Security and Exchange Board of India. So, sir, welcome to the Morning Echoes.
Thank you so much.
So, to start with, can you highlight a little about SEBI? What is SEBI? Can you tell us a little about SEBI?
Okay, SEBI is Securities and Exchange Board of India, which is a statutory body set up by Parliament of India in 1992 to protect the interests of investors and to regulate and develop the Indian securities market. It started operations in 1988 through an order of Government of India. The key functions of SEBI are focus upon development of Indian securities market, regulation of various intermediaries in securities market, and protection of interests of investors.
Okay.
Let me briefly explain a little bit about the main functions of SEBI.
Okay.
And before I talk more about that one, I just want to tell you we have the Reserve Bank of India, which regulates the banking institutions.
Yes, yes.
We have the Insurance Regulatory Development of India, which regulates the insurance companies.
Yes, yes.
And we have the Pension Fund Regulatory Development of India, which regulates the pension schemes in India. So, Securities and Exchange Board of India is the regulator of Indian stock exchanges. So, when we talk about functions of SEBI, number one is development of Indian securities market. Means whenever a company wants to raise capital from the public, they need to get registered with the SEBI
Okay.
and they raise money from the public through initial public offer. They raise money from the public and that IPO gets listed with SEBI and that is being traded at stock exchanges. Like we have the National Stock Exchange, we have the Bombay Stock Exchanges.
Yes, yes.
So that is number one. And number two is regulation of various intermediaries in the securities market. And in the stock exchanges, we have the various intermediaries such as brokers, stockbrokers, depositories, and depository participants, portfolio managers, merchant bankers, share transfer agents. So they regulate these intermediaries. And the third point is the protection of interests of investors. Protection of interests of investor means like we give education to the public. We give education to the public by conducting awareness programs in various colleges, offices, NGOs like that. How to invest in securities market, and for protection of interests of investors, we have the SEBI scores, where if the public who invest in securities market, if they have any grievances, they can approach their grievances with SEBI scores so that the interest is protected. So these are the main functions of SEBI.
Okay. Okay, thank you for highlighting about SEBI. And so when it comes to stock markets or shares, our people are very lagging behind comparing with the rest of the country. So can you throw more lights on stock or share market? What is security markets?
When we talk about securities market, it is a very vast topic.
Okay.
In few minutes, we cannot really explain about stock market,
Okay.
but like in other parts of the country, people knows how to invest in securities market. But in Northeast, like we're not aware about investment in securities market. So securities market means whenever company wants to raise money from the public, whenever company wants modernization of their projects, that time they raise money from the public. So in order to raise money from the public, they have to come out with initial public offer. They have to prepare a draft prospectus that is registered with the SEBI.
Yes. Okay.
And once SEBI or the stock exchanges give them approval, they can raise money from the public. And that raising money from the public is a long procedure that we will not be able to explain in few seconds. So a particular company has come out with a public initial public offer. They have raised money from the public through IPO. So during the IPO process, people buy shares directly from the company. Company comes out with a bidding process. They comes out with a particular price where investors bid the price. Now, like that bidding process, they usually opens in the stock exchanges for about 3 to 5 days. During this period, public can bid. Public can bid how much they want to offer to the company, how many shares they want to buy it, and once that process over, company will comes out with a cut-off price, and those who bid above the cut-off price, they are selected. They are selected, and that particular IPO gets listed in the Indian stock exchanges like Bombay Stock Exchange, National Stock Exchange. So people can buy shares directly from the company through initial public offer whenever a company comes out with an IPO. Now trading takes place in the stock exchanges. So those, when people invest in IPO, that is called primary market. The investors gets the price directly from the company in the primary market. Now that IPO get listed in the stock exchanges, and tradings start taking place in the secondary market. Now, initially you are holding 50 shares in the primary market. Whenever a company comes out with an IPO, you are holding 50 shares. Now trading takes place in the secondary market. That particular IPO or the shares of that particular company keep on increasing. Now you need liquidity. You need money. Then what is the procedure? You are holding 50 shares. You want money back. You need liquidity. Then you can sell your shares in the secondary market. That you are holding 50 shares, but if you want to sell only 10 shares, you can sell it. 20 shares, you can sell it, or you can sell the whole 50 shares. So some people will be willing to buy shares from those who are selling in the secondary market. So that is how people buy shares in the primary market, secondary market, like that.
So, and as you have talking about the primary market and the secondary market, so people can buy share from primary market as well as secondary market. So why would people opt for buying shares in the primary market, which will be more expensive than, right?
In the primary market, usually in the primary market, the minimum amount of investment is 14,500. Some companies, the minimum investment may be 1 lakh or something like that. But most of the companies, the minimum investment is 14,500. But some people, like those people who do not have much money, or those who have less experience buying shares in the market, they may try to experience buying small amount. They may try to buy share of a particular company by 100 rupees, 500 rupees, or 1,000 rupees, like that. So those who have money, those of experience buying shares in market, they prefer to invest in primary market. But for majority of people, they buy shares in the secondary market, because in the secondary market, you can buy shares today, you can sell it tomorrow. You can buy today, hold for some times. When you get once the share price increases, you can sell it like that. You can hold for a month or a week, or even for long term, you can invest it. But what I suggest is you invest for long term. You invest for long term, because like if you're investing for short term, suppose you buy shares by 100 rupees today of a particular company. If that particular company shares keep on decreasing, and if you sell it, you will lose it. But if you're holding that shares for at least a month or a year, that share price of that particular company may increase.
Yes. Yeah. Now, sir, if particular listeners, if one is interested in investing in the stock market, so how do one start investing in the security markets?
Okay, to start investing in securities markets, that particular investor needs to have a bank account. He needs to open a trading account with a stockbroker, and he needs to open a demat account with a depository participant. So these three main accounts are mandatory, and these three main accounts are required. So why you need a bank account? Because whenever you want to buy shares, then you need to transfer money from your bank account into the trading account. And whenever you sell your shares, then that money will be again transferred back from your trading account into your bank account. So for that purpose, bank account is required. And in order to participate in securities market, you need to open a trading account with a stockbroker. Because without a stockbroker, you cannot buy and sell your shares. So you need to open a trading account with a stockbroker. And in order to open a trading account with a stockbroker, you need to check whether that broker is a SEBI registered or not, because these days there are so many frauds taking place in our country. So we need to properly check whether the broker which you're going to open a trading account is SEBI registered or not. To name a few, like it's very popular, like we have the Zerota, we have the Angel One, we have the Motilal Oswald, we have the Kodak Securities, we have the SPI Securities, we have ICCI, HDFC Securities. All are some of the stockbrokers. So you need to open a trading account with a stockbroker, and you need to open a trading account with a depository participant. Because earlier, before the introduction of demat account, whenever people buy shares, they receive certificate, physical shares. But now, like after the introduction of demat account, the shares is held in the demat account. That is why you need to open a trading account and demat account. Trading account with a broker and demat account with a depository participant. And to open this trading and demat account, you can open at the same time, that is simultaneously. And that is what we need, all these three-in-one accounts in order to participate in securities market, that is to buy and sell shares in the stock market.
Okay. And to invest in stock market, so how safe is the stock market, or what are some of the risks involved, since one is going to invest his money?
Yes, investing in securities market involved high risks, because no one can give you a guaranteed return. No one can give you a guaranteed return, because like suppose you invest, you give your money in a saving account. No risks is involved. You keep your money in a bank fixed deposit, you get a guaranteed return. Whereas you buy shares of a particular company today, one share worth 100 rupees. That share may increase after a few weeks or months, or that share may decrease. So like no one can give you a guaranteed return in stock market, but if you're investing for long term, you can even get a return of 30-40% in a year. Some stocks are giving a return of 40% a year. Some stocks may give you a negative return. So nobody can give you a guaranteed return, but investors, real investors, those who have been investing for so many years, they are getting richer and richer, and they want to invest their money only in securities markets.
Okay, and now, sir, you say many risks is involved. The money may depreciate or it may increase also. So is there any platform which give guidance or which guide the investor?
Yes, like for investor protection and for investor education, that is one of the objectives of SEBI. That is why like SEBI has appointed us as securities market, and our duty is to conduct awareness programs in government offices or NGO or educational institutions and even with the farmers. So like if any government organizations or any institutions or any NGOs, if they want awareness, like they can approach us, and if they fix at that, and if at least 35 to 40 people willing to participate in the workshop, we can conduct the workshop and we can tell them about how to invest in securities market.
Okay, and as you're working under this field, quite expensive. As per your observation, how aware are our people, our local people, regarding the stock market?
Actually, I've been conducting this financial education workshops for the past 10 years. Actually, we mostly approach government offices and educational institutions. Whenever we approach the head of departments, they are reluctant. They are reluctant to take up even this workshop. But we keep on insisting. We request them. It is good for your employees, like that, like that. So once we fix the program, and the employers are even reluctant to come and participate or to attend a workshop of 1 hour, 2 hours, like that. But once they are gathered and once we start talking about all this sort of investment, they get much interest. And like they used to tell me, like, oh, you should have given us education like this before. So we talk about during the workshop, we talk about investment and securities market. We talk about mutual fund investments. So once they get the knowledge, they will say we'll start investing in mutual funds or buying shares from tomorrow onwards. That's what they are telling us.
Okay.
And regarding this buying of shares, like mutual funds, some people are doing it. Now we in Nagas also started investing in mutual fund schemes like that. Because we have given so many awareness, and even the banks are encouraging their customers to those who have money to invest in mutual fund also. But to invest in share market, like people do not have much knowledge about investing in securities market. So they usually go to the social media and they learned about investment in securities market. Some have tried, and those who have some knowledge about investing in securities market, they like to attend our workshops, and they get more knowledge about investing in securities market. That is what we are doing it.
Okay. And sir, earlier you also talked about fraud.
Yes.
So, what will be your advice for this kind of fraud schemes?
Actually, financially illiterate people, okay, they try to invest in what we call downline business or Ponzi schemes, where the promoters of the Ponzi schemes or downline business, they come out with a very high projections. Like if you invest today, after a few months your money will be doubled. If you invest 1,000 today, your 1,000 will become 2,000, your 1,000 become 4,000, 6,000, like that. And people want easy and quick returns. So those people are lured and they invest in such kind of Ponzi schemes or downline business. And people knows that the company where they are investing is not genuine, but they want to try their luck. And those Ponzi schemes are initially those who join the schemes, they get a return. So that attracts the investors and the news spread. Now people started investing in that kind of schemes, but as the scheme increases, more people will join, and later on the system collapses. The promoters of such kind of schemes, they will run away. So once they run away, the people, those who invested, they cannot get back their money. If you want to invest in any kind of schemes, like suppose for investing in a bank or keeping your money in a bank, that bank should be registered with RBI. Or suppose you want to buy life insurance policies, that life insurance policies should be purchased from the company which is registered with IRDA. Like that only.
Well, I believe when you talk about Ponzi schemes, it must be one example must be the RGA scheme very recently. Yes.
Yes.
Okay. And sir, lastly, if you have any message for our listeners, what will be your message for our listeners, or say the intended investors?
Like as I've mentioned just now, like to buy life insurance policies. They have to buy life insurance policies from life insurance company which is registered with IRDA. To invest in bank, they should invest in a bank which is registered with RBI. And to invest in securities market, that company should be listed with the stock exchanges. If your grievances with your broker, your company, you can complain to SEBI, because SEBI is the regulator. SEBI will help you to get back your money. Unless you invest in such kind of organizations, like even if you lose your money, there is no authority, there is no organizations who will protect your interests.
Okay. Thank you so much, sir, for being a part of the Morning Course. It was a pleasure listening from you, sir.
Okay, thank you so much.
Please like and subscribe to our channel and hit the notification bell for the latest contents. Also, follow us on all our social media handles.